A shift in economic attention during the holiday season. As the holiday season approaches, analysts have noted that significant financial developments often occur quietly in the background, while public attention drifts toward entertainment and seasonal distractions. Despite the lighter atmosphere, several pressing economic signals have emerged that economists say should not be overlooked. These issues, according to multiple reports, could influence the broader financial landscape going into the next fiscal quarter. Speculation surrounding Federal Reserve leadership. Recent discussions across financial outlets have highlighted renewed speculation about potential candidates for future Federal Reserve leadership. Among the names circulating is economist Kevin Hassett, who previously served as head of the National Economic Council. Some commentators have expressed concern about the prospect of his appointment, while others argue that the direction of leadership will depend largely on broader policy priorities. Past interviews and public statements made by Hassett have resurfaced as analysts debate his economic forecasting record and policy positions. For example, early projections made during the initial months of the COVID-19 pandemic, as well as commentary related to global financial events such as Brexit, have been referenced by critics and supporters alike. These discussions form part of a broader conversation about how future leadership at the Federal Reserve could shape economic decision-making. Why Fed independence matters to analysts. Industry experts often emphasize the importance of central bank independence, particularly during periods of economic uncertainty. Several financial researchers have recently pointed to the potential impact of political influence on monetary policy, raising questions about how future appointments could affect long-term financial stability. In parallel, commentary has continued surrounding the roles of various members of the Federal Reserve Board, including officials responsible for financial stability oversight. One such figure, Dr. Lisa Cook, has issued public warnings about emerging market risks, particularly those connected to highly leveraged trading strategies. The growing concern over basis trades. A significant portion of recent economic analysis has focused on the rapid expansion of leveraged basis trades in the Treasury market. Hedge funds and other financial firms have reportedly been engaging in large, complex transactions that rely on predictable yields. According to experts, when interest rates move unpredictably, these trades can become unstable. Financial analysts warn that, due to the high levels of leverage involved, unexpected market swings could pose broader systemic risks if major institutions face losses. This is why, according to commentators, the Federal Reserve's financial stability committees play a critical role in closely monitoring these developments. Liquidity pressure and the repo market explained. Another issue attracting attention is rising volatility in the repo markets, mechanisms banks use for short-term borrowing to meet daily liquidity needs. Recent activity suggests that certain facilities have been under unusual strain, prompting the Federal Reserve to engage more actively to stabilize markets. Economists explain that when the secured overnight financing rate rises above the Fed's target range, it can signal elevated market risk. This pattern, observed intermittently in recent weeks, has raised questions about liquidity conditions and the capacity of financial institutions to absorb short-term shocks. According to experts, these fluctuations underscore the importance of continuous stress testing across the financial sector. Such tests help identify vulnerabilities and prepare institutions for potential market turbulence. The role of private credit in emerging financial stress. The rapid growth of private credit markets has also become a focus of economic discussion. Non-bank financial institutions have taken on increasingly large portfolios of loans in recent years. While many of these institutions remain stable, analysts caution that the structure of certain loan packages, especially those with weaker underwriting standards, could pose risks if borrowers face deteriorating financial conditions. Recent reports highlighting losses within major private credit funds, including those tied to large asset managers, have intensified these concerns. Analysts point out similarities between today's collateralized credit structures and past financial instruments that contributed to market instability. Broader questions about financial transparency and oversight. As discussions about market structure and liquidity challenges continue, Policymakers and commentators are also examining the long-term implications of digital currencies and private stablecoins. Reports from congressional committees have raised questions about how digital currency strategies, private investment vehicles, and legislative proposals intersect with federal financial oversight. Analysts suggest that decisions concerning central bank digital currencies, stablecoin regulation, and Treasury investment mechanisms may have significant consequences for future economic resilience. These debates highlight why leadership roles at the Federal Reserve, Treasury, and financial committees hold substantial influence over the nation's economic direction. Looking ahead, what analysts expect? While consumers navigate tightening budgets, higher borrowing costs, and ongoing inflationary pressures, economists expect that topics such as liquidity stability, credit markets, and regulatory policy will remain at the forefront of financial news. The upcoming weeks and months are likely to bring additional reports, hearings, and analyses as policymakers continue to evaluate the challenges facing the U.S. economy. Independent media outlets and economic commentators emphasize that close attention to these developments is essential, as many of the underlying issues, such as leveraged trading, private credit exposure, and digital currency regulation, carry long-term implications for markets and everyday consumers. Cerebrox News will continue monitoring these evolving economic discussions and provide updates as new verified information becomes available.